few things we need to point out here. All right, first, do you see this line, that wick? That is a 50% mark that it wasn't able to get back above this candle, these two candles right here. It couldn't get it back above 50%. And so that created what's known as a double top, okay? Or let me show you this. When you can't get a closing above the 50% candle, you can't go higher. And look at this pattern right here, okay? You can draw a line just like that. So it went up, okay? That's the boom boom candle. Just act like that's all one. This is a bull flag, all right? It went up, hit resistance. That's what this resistance is, okay? And then we were making lower highs all the way down, okay? Look at this, and then we got the drop right here. Let me know if you guys see that, all right? Everything comes down to pattern recognition for you guys to learn how to master and dominate these games. Now, when I say stuff like 100K in a day, 30K in a day, this candle alone is 30 or 50K. This candle right here, that red one, is 30 or 50K. This green one is 30 to 50K. You catch both, that's 100K. That's when I talk about the ability to know how to do this stuff in a day. And then I rinse and repeat. So a lot of times you can do it within 2 hours when you master this, okay? Now check this out. Do you see how this candle right here, okay, do you see how this candle, it cleared all of this right here? It took out this candle. Look at this big red candle. All of this got sucked within there, okay? So it wiped out all the progress that was made on all these candles. I want to show you guys this. And here it is now. Look at this gap right there, okay? Gaps are like magnets. Everybody write the word magnet down.
Magnets. Chinese rare earth magnets are now still to be exported to the US, it sounds like. So let's get into a little breakdown here on a stock, MLYS. This was the big move back in early September. It's been an absolute tear since then. And it looks like there's some move to the upside. That was on the 2nd. So, yeah, just going to double check here that actually, you know, there was no crazy news there. Excuse me. Just a little stream sneeze. Here we go. This is the stock MLYS. And it's hard to believe, but that move seems to be on raising money. Can double check that here, but that's what it looks like. Cash position. A lot. Here was that offering. 250 million. And then 175 million in March. So, did it have a big move in March? Probably not, right? I'll be honest, guys, I have no idea what this was. September 2nd. I can see comments over in the chat. on YouTube. But it looks like MLYS simply moved higher on an offering news. It's pretty unusual. Extremely unusual to move that much. I mean, this is 4 p.m. on the 2nd is when they announced the offering. So that seems like that's after it went up, which is what you generally expect. Stock goes up and then they raise money. Some sort of news came out here though. That's the company, that's the move. And here's the idea. All right. Again, I can see comments over on YouTube. But let's jump into a little breakdown here. There is one stock that is about to break out. In my opinion, it is a pharmaceutical stock, and the market is rebounding after Trump's tiff with China about rare earths. Trump now tweeted everything's okay, nothing to worry about. The market's rebounded up to levels from mid-September. We were down as low as early September. As we move into the middle of this week, and when you see this video, this pharma stock MLYS is poised to break out. Let's look into why this stock is at this level and looking attractive, and also what the market risk is after that horrific 10% move down in many big stocks and 3-4% move down in the market on Friday. If you were in crypto, good luck in your recovery. If you were in stocks, be grateful you weren't in crypto. This is not financial advice.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
Now, here's the move down on Friday, and here's futures just opened as of the time it's recording this video. You can see the time right up here on Eastern time. And yeah, we regained almost half of that drop. So pretty significant. We can look at it on an intraday basis, although it's not really necessary to do so, but it does sort of show that significant gap into futures. And of course, that is mirrored in the NASDAQ, mirrored in the Russell small cap futures, mirrored in Ethereum as well. If we look at Ethereum futures, not ETH, and Bitcoin, kind of getting there, you know, not really. It sort of just keeps going down. So do I expected this to go back up some? I think most people would say, yeah. I mean, IBIT went from 70 to 65, and of course, Bitcoin futures looks like this on the daily. Little gap up, you know, into open and then selling off. So certainly looking at this, Bitcoin doesn't look great compared to, say, even Ethereum, and definitely compared to the market as well. I mean, this is a massive gap up on Ethereum and on the futures right here. So we'll see what happens here, but this is the stock that looks good, and it's not often you see such a clean pivot line, a clean looking flag, and we're not all about technical analysis here, but it certainly is a good sign when you see something like that breaking out, and when you see the market going down so significantly on Friday. It's that green bar I'm highlighting. Meanwhile, MLYS actually went up. I can't highlight it, but it's that one right there, went up 5%. So that's serious relative strength. And of course, with all these big companies moving down, which pretty much compose the market, NVIDIA, Palantir, it's healthy to look at companies that are holding up. Now, what is this stock? Well, I couldn't tell you exactly, if I'm being honest, because I'm not a biotech analyst, but this is what I know, okay? They are basically in this industry, okay? Cardiovascular, renal, I think that's eyes, metabolic, that's like, appetite. That's about as deep as I can really honestly get into this. Now we can look at some of these other tickers. VKTX has been the subject of, look at this chart. This thing has been hanging around for a while. This is pretty gnarly. It's not really something, I shorted it up here. It's not something I want to buy. This is the risk with biotechs. And this is kind of what needs to be highlighted after what happened on Friday. I know we're gapping up here, but this is kind of an important moment in time to say, hey, even if you weren't in crypto, even if you weren't in, even the major coins, Solana, XRP, pretty rough moves down. BMNR and Ethereum Treasury, of course, moving down some as well with crypto. But these moves are recoverable, right? What is this? 7% maybe, 10%. Of course, if you're in these leveraged altcoins, those are the people that got wiped out. They lost 60% or more in a day. But the great thing about trading ETFs is that they're not even listed. So those altcoins are not listed as ETFs. There's only ETFs for Bitcoin itself, Ethereum, and then those sort of other majors, Solana, XRP, being the ones that I look at. I'm not a crypto person, okay? But biotech ETFs also coming down a little bit. So it makes you wonder. Home builder ETFs as well coming down. Now, with everything gapping up, including crude oil, you have to think, where is the strength? And you have to look at Friday, in my opinion. So is MLYS going to break out? I can't say that definitively. There's a lot of other pharma companies that, also have to show some strength, in my opinion. If this is the industry that we're exactly talking about, then we expect, some type of move up in those stocks. Generally, they move up. ARDX does not look like it's at all interesting. KDNY does not even look like it's listed right now. AKRO certainly sounds familiar. That one does look strong recently. So it's kind of a mixed bag, and all I can really say is if quantum is any indication, QBTS, QUBT, RGTI, IONQ, these stocks all moved up together. Yes, recently they pulled back, but if that's an indication of stocks moving together, then I have to think MLYS is going to move along with some of these other stocks. VKTX, ARDX being the one that's a little bit worrisome, and I guess AKRO being the one that is closest to being like the second in command in terms of volume, which is a lot. 20 million times 50, that's whatever, $1 billion. So that's kind of the closest comparable. This is a tiny stock, really. 40 million, but it also has incredible range. And this I wanted to talk about too. This is insane. They actually announced an offering for 175 million at 4 p.m. on this day, September 2nd. So here's the offering with some big names, and also a name that is associated with like startups. So these are reputable though up here, and yeah, 250 million is pretty crazy. Offering was pretty close to the current price, but definitely a big move after that. So, you know, with a move like this, you expect some type of phase news. That wasn't the case here. So this is kind of a technical idea. And are there risk factors? Sure. There's, of course, what we just looked at with VKTX. So if we look at August 19th and we jump into, if this was the news that made MLYS go up on September 2nd, that offering, 175 million. There are also things to be aware of. If we look at VKTX and we look at August 19th, this is what can happen, okay? Disappointing obesity pill trial data. So you have to kind of be careful with these biotech stocks. I mean, you can look at PDUFA dates for MLYS, but honestly, it gets to be pretty hectic keeping all these dates in mind, getting a list of all the trial dates for every biotech company or every company you may be holding. So, you can dig, but at the end of the day, you kind of just have to keep in mind there could be trial data that causes a drop of 40%. And in HIMSS, we saw, this wasn't even trial data, this was just a partnership with Novo Nordisk gone sour, where Novo Nordisk said, hey guys, we're going to market our Wegovy drug, but turns out we don't like how you're marketing it really, and we're going to have to sort of reconsider that partnership. Since then, of course, HIMSS has shown incredible strength. The CEO came out with a statement saying, look, we're trying to bring a drug to the people. Did sell off on earnings, but still incredible strength. So I'm not saying to swear off biotechs. I'm just giving you caveat after caveat as to why, I'm not going to sit here and pretend I'm an expert, but also I'm not going to sit here and tell you this is a perfect technical setup and nothing can go wrong. So that's kind of all the information at a 10,000 foot view that I think is useful. If you're going to really search for all these dates for every company you might get interested in, you're probably going to get a little embroiled in the details, and you're going to find yourself having trouble picking good breakout technical setups, and you're going to start sort of falling in love with these companies, which it's helpful to know that they're basically in phase 2 and they're waiting for results from phase 2. So first quarter 2026 is good. There's no precise PDUFA date, so there's nothing to really be worried about that is known. But of course, at any point, there could be some type of collaboration chaos, like what happened with HIMSS here, or it could be some sort of like partial trial data. This was actually the trial, but some sort of pre-phase 2 results that come out that make this less appealing. And by that I mean could give back, some amount. So I'm really hedging my bets here, saying this is a good buy, after I just said it was the stock to buy, but I'm just trying to lay it all out there in terms of what investing in a biotech entails. Typically a move like this, you'd expect this on some type of phase 3 result. So I don't know why there's 10 million of volume, but all you can say is, well, this stock was so illiquid before, it was trading $10 million a day. It raising 250 million when it only trades 10 million a day is a lot of money. So it could be the case, I buy it, that the reason it doubled and more is from raising that much money, which is a huge deal for pharma companies, which typically go big or go bust, right? So that's the idea. That's a little bit about the current market context, which of course is gone from extremely scary to actually things are going to be fine, it seems like. So if you like these videos, go ahead and hit that like button. If you haven't subscribed, hit that subscribe button. And if you want ideas that are very timely, head over to stockscommunity.com. You can try it out for $25. Hop in the Discord for 7 days. See if it's for you. I will see you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
All right, let's jump back into a little Chris saying here.
They will suck you to this price. Okay, so this is how we are knowing we're going to go not only to close this gap right here. You want to close the gap, but then you got support 1. We're going to call that S1, and then this is S2, and then this is S3. Let me know if you guys see that. Okay, now we can turn around at any time. We can come here and then go boom. We can go here and then go boom, or we can come here and then go boom. No matter what,
This uranium stock looks interesting.
We just gotta be looking and locked in so that we know how far we're going down. Watch this 2 times so that you get this lesson. Okay, I know this is high level, this is next level, and I know you're not gonna see this every day and done in this fashion. Okay,
and by the way, the stock he's talking about,
right? So because this
I feel like that would be pretty useful
right here took out all the gain. That's the boom boom candle, and it took out both of those 2 candles. Okay, now guys, the next target is going to be them trying to
at the same time. I don't want to get in the way of his flow.
Going to come down here.
It's motivating
to close this gap. Okay, then whatever we do from here remains to be seen. We can keep going down either way. We don't guess, we don't gamble, we prepare. Okay, so that's what I want you to see, and regardless of that right there. Okay, that is Tesla. All right, that is Tesla, and I want you to see and know that on Monday or this upcoming week, you're going to have more down pressure, or AKA follow through, because we're trying to close the gap. There's always a goal. There's always a destination. There's always a target. That's why Coach calls them out pinpoint to the penny in either direction. For me, none of this don't matter. Okay.
All right. Let's see if we can get an idea of what's going to happen tomorrow and through this next week. It's going to be a difficult trading environment, but I do think these uranium companies are interesting for sure. So let's jump into a little breakdown here. I want to know what UEC stands for as well. Uranium energy. So here goes nothing. There's one stock that is poised to jump up in share price. It is a uranium company. Uranium, of course, needed for nuclear energy, nuclear reactors, which are needed for AI, the biggest build out of the decade. And recent market volatility on Friday, we gave back all of September, and then now we're gapping up as of the time of recording this video, giving half of that, gaining half of that back. So now we're like to mid-September levels again. So things are, flip-flopping quickly with the whole China-US tensions. And right in the center of that is rare earths. And as a consequence of that rare earth uncertainty, there's also uranium euphoria, because that uranium can be used to power nuclear, which can create energy independence. And it's not 100% clear as to what, because you need rare earths for the magnets that are in reactors as well. But at the same time, it helps these companies that mine uranium and refine it in the U.S. Because it's as China ratchets up its sort of regulation of exports to the U.S. of critical rare earth materials, the U.S. companies become more and more valuable in terms of potential to create that independence, and nuclear is happening, whether or not we're ready for it. So the AI overlords, the big tech leaders want it to happen. So government's given the green light with the Stargate $500 billion project for permitting, and UEC, Uranium Energy Corp, is a ticker that is poised to break out. So, not financial advice. Let's jump into why this is the one for tomorrow and this week, I believe.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
So here's a little bit about the company, UEC, like a mid single digits $billion company, which puts it in the same category as like the USAR Rare Earths company, the sort of maybe Navitas Semiconductor. It's sort of in that large cap but unknown category. And they're expected to ship in late this year their uranium. And of course, nuclear generation being doubled by 2050 is a long-term goal. But as data centers get ramped up, it's certainly seeming like there's way more euphoria about uranium than 2050. I mean, this went from 6 to 12 in just a few months. So here's the move right now. You might say, okay, well, it just failed this breakout. What's the big deal? It's like, well, it didn't really fail. It actually had a really positive green day on Friday on a day that the market went down 4%. I mean, the worst day in the market since April lows. These days were absolutely insane. Even this day. So this day was like 4%, right? And this day was more than that. But that's pretty equivalent. Like this day is pretty equivalent to this day up here. Maybe this is slightly bigger. It's hard to measure exactly because it's different stock prices. But if I could see my percentage drawer, I would tell you exactly what it was. Pretty close. So you have to think on a day like that, when a company share price goes up, it's pretty exciting, and it's not just chance. You look at DNN. Okay, that's a green day as well. Not so much. It's a tiny little green day, but it was already up many days in a row. So I think UEC offers the greatest risk to reward because you can sort of risk off these levels, even though, yeah, it certainly had some red days. It's a little choppy, but DNN, you can do that as well. But I don't know. It's kind of a toss up. This is about 50% up. This UEC is, maybe, well, actually a lot more than that, but something about the way this is holding up in this day appears more interesting to me, but really upon second glance, I mean, this one looks pretty interesting as well. So it's hard to say exactly, pick your poison, but I do think UEC having that positive green day looks pretty awesome, even though it was sold off. It's reminiscent of Navitas and VTS, which I mentioned earlier in the video. Ton of volume ramping up, and yes, like everything that looked like it was going to break out got sold off on Friday, but at the same time, when a candle closes green like that, it's pretty bullish. So that's super granular. Let's zoom way out. What the heck are we talking about here? There's a lot of increased uranium reserves. This is the leading, I don't know what ISR is, but it seems like the leading uranium company in the US, or certainly in the conversation of those top three we're talking about that are public. Now, how do they actually compare? Well, there's the market cap for UEC. If we look at UUU, it's a little less. If we look at DNN, it's less as well. So, certainly seems like the leader. I don't know what this new drug application is. That seems like that's totally hallucination. But this is the date from Reuters. Okay, in Wyoming, uranium by late this year. So could that be a big stock price appreciation event? Is the stock going to go up into that event? And then could be a sell the news? Could be. But I'm not trying to bet on that. Just really looking at the chart. UUUU. This is really no big deal. 2,500 shares at $20. I mean, that's what, a couple $100,000 So actually, it's way less than that. It's less than 50,000. It's not a big deal at all. Public math is not my straw suit, but this company is a little bit smaller. Again, it's sort of a toss-up, but DNN, this is the smallest. So that would really be the only reason that this is sort of off the table compared to UEC. I know it sounds like I'm agonizing over comparing these, but it's pretty important to sort of separate them a little bit, because it is really similar to talking about, what's the difference between RGTI, what's the difference between QBTS, what's the difference between IONQ, what's the difference between QUBT. This has always been the laggard, and that's continued to be the case. And if you can kind of establish early on which one trades well, which in the case of the quantums, it's pretty much IONQ has been on a crazy run. 30 to 80. So compared to QUBT, it's kind of no contest which one is sort of cleaner to trade. You have breakout opportunities, where it just grinds up. And I think also, if we look at a more zoomed out level on DNN versus UEC, pretty similar, but I do think after this earnings, holding up after this earnings is a good signal, whereas DNN, this is a breakout, but it's pretty difficult, and it's just choppy and gappy, and sometimes you just have to go with what you visually see, which is going to be hard for a fundamental investor to believe, but it is what it is. So another big point as well is that DNN is focused on Canada, which is great, but there could be less regulation in Alberta, for example, depending on where they're looking, but maybe not quite as investable at this particular moment in time when there's so much focus, particularly over the weekend, on U.S. energy independence. And yeah, it's really not about energy independence. It's more about rare earths independence. But there's definitely a link between rare earth and uranium independence in the U.S. And when we talk about UUUU, Energy Fuels Inc., I don't think this is really in the same conversation just because it's been ramping up. So just a broader point, when you see a stock go from, 5 to 20, but more recently it had 8 green days in a row, maybe 9, depending on how you count it down here. It's just crazy to think about buying that. Eventually you're going to have a pullback like IREN, this AI infrastructure play that was a crypto miner, and even more concerning, you could have a pullback like App. Now, this particular move was sort of expedited based on some class action sort of data handling concerns. So that's what led to this down day, but it has rolled over since then, and it was already rolling over before then. So just as to say, if you get a handful of dozen days in a row, you could base and go up higher, but you could also start to roll over. So this UUUU is totally off the map, and I think at a DNN and UEC looks better as of now, and in general the way it trades in terms of creating this sort of pattern with actually some range to 7%. DNN is a little less, and then also the market cap for UEC is a little higher. So you're getting the best of both worlds. You're getting a more secure, higher market cap combined with more daily range, which is a sort of swing trader's dream. So rare earths and uranium, critical minerals, essential to nuclear. It's just sort of all tied together in the sentiment. It's maybe not directly tied together, but these projects that these companies, this uranium company gets control over a project that is a heavy mineral sands project that can produce rare earth materials. to be processed at the company's mill. So, this isn't directly about uranium, but it's all in the metals and mining category, so they're linked. Now, we could pretend to be geologists here, but I think that's sufficient, definitely considering most people who are trading this are not even knowing barely what these companies do at all. They're just seeing this pattern and saying, okay, buy the thing, chart looks good, volume's there. Now, if you like these sort of explanations, if you think they're useful, hit that like button. If you haven't subscribed yet, hit that subscribe button if you want more ideas. And if you want to talk about the best chart on a given day, head over to stockscommunity.com. You can try it out for 7 days for $25, and I will see you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
All right, let's jump back into a little bit of Chris saying.
I don't care if we go up or down. I already know. All I need to do is, if the Lord wake me up, I'm going to say, yup, bet. What we doing today? Soon as I say what we doing today and I see it, are we going up? Boom. I know where we're going up to. If we're going down, like I'm telling you here, I know where we're going down to. So that's why I say with me, I'm going to make 100K in either direction, calls and puts. I want to encourage you guys to do the same in terms of learning how to do puts. So we don't got to just be waiting so long for the market to come back up. Okay. Even though it's going to always come back up if you have a great stock. Okay. Remember that for me. All right. Now, what else Coach got for you? Okay. Now this one is SPY. Okay. Now look at this candle. All right, let's get busy. Boom. This wiped out all of this. The SPY cleared all of this, and now we are sitting at support number 1. Okay. Boom. All right. That's how powerful these things can be. That's how quick it can all go. But this is also called, you ever hear us say, wait for a pullback, look for a pullback. Okay. This big candle right here, that's a boom boom candle,
did turn out to be a buy the dip opportunity, but only really if you could get in with futures. 5%, so
10%,
pretty hard to predict in advance when Trump was tweeting what he was going to say.
That's what you want to see, because look at this. Write this down, watch this twice. I'll keep a clean chart, so I'm not going to keep that stuff up here, okay? But look, we got a hit here. We might overshoot on Monday, then come down, and then maybe base before going back up, okay? But look at this. Regardless, this is what you need to know. This right here is 50%. We need to get back to that half mark. And this right here is 100%. You need to see, where do we go? We gap up or bounce back off of support and go up. Do we get here and come back down? Or do we go a little higher and come back down? Okay, regardless, if we come back down, guys, we are looking to close this gap right here. Remember I showed you the gap on Tesla? That gap equals 44, just so you kind of can know where.
Trump already talked, so, well, he tweeted, so I don't think we have to worry about that as much. But yeah, let's jump into a little breakdown here. This company Coors got acquired by CoreWeave, right? Something like that, some sort of all stock transaction. Still pending, subject to approval. $9 billion all stock acquisition deal. Core Scientific shareholders receive CoreWeave common stock. Okay, let's jump into a little breakdown here. There's one stock that is about to jump up in price. It is a stock that deploys NVIDIA GPUs. It does have a partnership with a data center company that also has an NVIDIA investment. In essence, what we have here is another AI hyperscaler infrastructure investing opportunity. Did have a all stock acquisition offer that is still pending. So on that news that the offer was made, the stock actually sold off. And since then, we are grinding back up. So that acquisition has until the end of October to get voted on. So let's take a look at the ticker now and see if it's a good time to jump into CORZ. The company is Cores Scientific. Let's just take a look. This is not financial advice.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
So, one more note. If you haven't dropped a comment down below, I am responding to comments down below. However, I'm more often responding in the group just because, honestly, it's just less noise in there, if that makes sense. So, here's a little bit about Cores. This is the company, CoreWeave, that tried to acquire Cores. That acquisition is still pending, and we have until the end of the month for that to basically happen. And if you hold Core stock, you're going to get CoreWeave stock. Now, almost more importantly, here's the chart, okay? And here's the volume that came into Cores. Did get sold off a little, but this day was the massive down day in the market on Friday, right? With the rare earth tensions between the US and China, the Trump tweet. So since then, Trump has said, hey, everything's fine. And the market is gapping up on futures at the time of this recording of this video. Pretty significant gap up. So CoreWeave also looks like it's in an interesting spot. It's not as exciting right now, given the more amount it sold off. But if we look at Cores and we back out a little bit, this is the sell the news event. So there was the rumor that CoreWeave was going to acquire Cores, and upon that offer being announced, the company did actually sell off on that news. So since then, we're grinding up to that level, which is sort of makes sense given that they have until the end of October for that to go through. It's hard to say exactly why it sold off so much, but maybe it's more commonplace for an acquisition to get announced near the deadline of the date of the vote. So we're getting near October 30th, which is that deadline. So that's pretty much the story here. We're near this line as well. Can you buy it here looking for a price higher than when it was announced? You could, okay? That's kind of what you're speculating on and me picking this as an idea. It went up to 21, so there's definitely some room to the upside, and there's certainly some volume coming in as well. Now, do you want to hold this after October 30th? Probably not, right? Because if that acquisition doesn't go through, it's probably going to sell off some. So you're sort of in an interesting spot where you can buy off of this level, say $18, and there's some volume coming in, suggesting, given that this was not selling volume, I mean, there was more sells than buys in the market as a whole, so it did sell off Cores as well. But this tiny amount of down motion on this much volume, I mean, yes, the candle is painted red, but it was only slightly more sells than buys, which means there's a lot of buying going on, which means this thing could go up. So that's the technical opportunity, and a little more about, you know, what we're talking about here. This is the collab. The big names is Microsoft, basically buying a bunch of CoreWeave's server space, NVIDIA. Cores is using their GPUs, and this is the partnership with CoreWeave off of Core's website. So $1 billion+ expansion in Texas, and this is kind of the plan. They're going to develop high performance computing projects to power advanced AI, low latency. I don't exactly know what Cores brings to the table that CoreWeave doesn't, but that's a lot of revenue, okay? Over 10 billion. And if CoreWeave wants to acquire them, then they're obviously pretty useful. If they're going to be funding part of this data center build out, CoreWeave's paying for most of it. It could be kind of a situation where Cores brings the research expertise. I mean, they have scientific in the name, and CoreWeave brings the funding. CoreWeave has a lot of debt as well, so they were kind of making a bet on there being demand, basically from OpenAI or OpenAI's financiers, right, the NVIDIAs of the world, to keep this whole circus going. So here's Cores. They're in the miner space now. They've moved into AI related workloads. This is the story. It used to be Bitcoin mining up here, and now it's all AI because it's just more margin in that business. So it's all sort of checks out in terms of them being at the center of this theme. But now the question just becomes, is this the company you want to buy that's in that AI infrastructure umbrella? And I think it is. I think it is because if you look at other stocks that are similar to Core Scientific, they're not really like investable technically. If you look at Iron, you can't buy that up here. If you look at even the little crypto miners, Mara, I mean, it sold off pretty significantly on Friday. Riot also was way overextended. So, I mean, you could buy CoreWeave itself after that 14 billion cash infusion from Meta that did make the stock go up, but it's still kind of chopped up around. It's just been a really obnoxious stock to trade. It's just been difficult. I mean, because you buy here, you risk a couple days below, stops you out. You buy here, you risk this level, stops you out. Like the only saving grace is this 20-day moving average for CoreWeave. And by process of elimination, that kind of leaves Cores. There's not really anything you have to worry about. It's already getting over those all-time highs. And yeah, it IPO'd January of last year, but CoreWeave is even more recent than that. It's April of this year. So this is sort of a fresh opportunity, pretty fresh chart, and you kind of have an indication of where it could go, at least test. So you're kind of risking $1 or 50 cents to make, 3-4 at a minimum, and then more above that. Now, do you have to be careful with October 30th coming up? You definitely do. But besides that date, I don't really see anything that worrisome, in terms of volatility that's going to come in to this story. All the news is pretty much going to be about this proposed sale to CoreWeave. So it's a bit of a short-term play. I certainly recognize that, but all the plays right now are short-term because there's so many stocks that have earnings at the end of October. I mean, if you're trying to decide if you're going to buy NVIDIA, the juggernaut, it's like, okay, well, you're still actually NVIDIA earnings is pretty late. That's a really bad example, but AMD, for example, yeah, you have a few weeks. That one's pretty good. Netflix earnings are basically on top of us 2 weeks. These consumer earnings, Spotify's a little further out, but we're kind of out of this, easy money period for the last month. Yes, we had this gap up, but things are probably going to chop here. Okay, they're just probably going to chop. So, I'm giving some names, MLYS, that are breaking out, that are really off the beaten path, as an example. And I don't know that there's going to be a ton of names that are setting up as well as stocks like Coors. So that's kind of the idea here. This is the move that we're currently working with, and this is the kind of news that we just have to be aware of. Are there any Mag 7 stocks that are going to come out with news? Any OpenAI news? Anything like an OpenAI investment in video? Stuff like that could change the trajectory of this company. It could. I don't think it's going to be for the worse. I think if anything, it could be for the better. Unless you buy really close to that October 30th date, at which point you're really sort of not giving yourself much breathing room. So I don't think Cypher is investable. I don't think these other miners are investable. I think CoreWeave is. So that's where we're at. This is just Sunday futures happening right here. So this is, bullish, although, we don't want things to gap up too much, and they'll be difficult to buy early into the week. So that's all we're seeing there. If you like these videos, go ahead and hit that like button. If you haven't hit that subscribe, hit that subscribe. And if you like the idea of chatting in a group setting or, one-on-one, you can DM me if that's easier for you when you're getting started. Head over to stockscommunity.com. You can try it for $25, and I will see you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.